Okay, so it started, the housing crash or the housing correction. So we see mortgage demand down to basically where we were 25 years ago. So what should you be doing? So in today's video, we're going to discuss housing demand, the supply and demand, and then where I think people's psyche is. And then we're going to go on to mortgage rates. So without further ado, here's the headlines that we're seeing today. Mortgage demand drops to a 25-year low as interest rates climb. It's not only interest rates, it's house prices are crazy. And why? That's the biggest thing we're trying to figure out. Why are home prices so high? So let's go over to the economic calendar. Let's go through that. And then I'm going to explain to you why housing prices are so high. So we go over to here in the economic calendar for today is building permits. They're actually up. So we were hoping that the building permits would be substantially down, driving down, the inventory and driving down prices. That's the way everybody thinks, right? Well, that's actually wrong. The more houses in the market creates more supply. Okay, demand, we know demand's plummeting. So what this is going to do is it's going to cause house prices to drop. Okay, to what level? We don't know. So anybody that goes out there and says the housing market's going to crash to the worst levels ever, please check out this video right here that I just posted the other day. And it's a video by me, but introducing another video to you guys to explain what actually happened in 2008. Because you guys got to get the context of what's happening in 2008. Because all the videos that I'm watching is saying, the housing market is crashing. It's 2008 all over again, or even worse. But you really have to understand it. If you're in the market to buy a house, you have to understand the dynamics between it and what happened actually in 2008 and what's happening right now. So just because house prices have increased so much doesn't mean we're going to have a crash. So please check out that video and you'll understand a lot more information about how real estate works, especially how mortgages work, because that was the biggest culprit of what crashed the 2008 market. So let's get through this itinerary. The first thing we want to come across is housing. Housing permits. How many houses are being built? Well, everybody keeps saying there isn't not a housing shortage. So what you're seeing on your screen right now is a chart that we've had. And this chart right here actually goes over the last, and I really can't see these numbers down here, but this is 2008 and the crash. So this little section right through here, this is basically what happened, during the 2008 to 10 crash. Housing was up here. This is how much housing was being built. Are we in the same position as that time? No. Okay, so we never peaked out at these levels. Okay, that's number one. So the supply still isn't there truly. You go down through here, and here's the number where we're at right now. Let's go across and see when we were at these levels before. It goes way, 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 way back in history that we were at these levels. So we still are not at the point of overbuilding that we saw back in 2008. Plus, you got to remember what happened in those days. There was a ton of foreclosures because people were in those subprime mortgages that were just crap. Those start resetting, putting people's housing payments up double, triple. In some cases, they couldn't afford it. So the only option they had, because they had no equity in the house, they didn't have any equity appreciation, they were forced. And the key word there, they were forced to sell or get foreclosed on. So a lot of the people went in and they tried to sell their houses. They had to sell them under what the market actually deemed. So let's say a house was worth, they owed on a house 200 grand. Well, somebody's willing to pay 180 grand. How do you sell that? And that's what's called a short sale. So back in 2008 and 10, we had tons of short sales. You don't see any short sales. Ask the deemers out there that are saying, oh, this crash is coming along. Ask them how many short sales there are right now. There's probably none. Okay, so that's another piece of this puzzle. So the supply side isn't there. It was growing and now it's starting to subside. Why? Because demand is basically down to zero almost. Okay, so that's what's going on in the housing market. It might be a good time to start testing the markets. So what I'm expecting right now is a recession. So everybody's going to join this bandwagon here shortly. Everybody's on the bandwagon, the housing crash. Why people don't jump on this bandwagon that we're in a recession. So what normally happens in a recession? Well, right now what we're seeing is the Federal Reserve basically overdoing everything. And you can watch CNBC, any of the financial channels, and they're going to tell you this is going to end bad. So what's going to happen is next year when we're really, really, really into a recession, the Federal Reserve is going to sit back and say, oh, geez, we overdid it. We were looking at lagging indicators instead of forward-thinking indicators. So they're going to overdo it. Then they're going to have to pivot and start reducing rates. So at that time, you're going to see things starting to pick up again. That should be probably spring or summer of next year. Perfect timing for that housing market that we usually see. Usually everything kicks off right around Super Bowl and people buy all the way through August. This time of year also you're going to have, housing sales are way down and so forth. Please watch the headlines there and please read into the details. Like I always say, you can't judge a book by its cover, because this time of year house sales always drop. Okay, it's just a seasonally adjustment that takes place. So that is that piece of the equation. Last thing is, remember all the politicians keep saying, we're not going to raise your taxes, especially on those in the low income categories. Well, this just came out today, the tax brackets. So you see right here, if you're making $22,000, let's go through here. So the tax bracket in 2023. So if you're making $22,000, well, let's say $22,000 right here, $22,001. Your tax rate's going to be 12%. What was it last year? Well, if we go down through here, sorry, I'm going the wrong way. Go down through here. If you're making $22,000, you're right here, you're at 12%. Let's say you're making 45. Here, let's look at this. There's a point here, guys. If you're making $22,001, you're paying 12%. If you're making $22,000 even, you pay 10. Okay, let's go down through here. You're making $11,000, so $22,000 is going to take me. If you're making under $22,000, I went from 10 to 12. Okay, so let's look at the other piece of the puzzle. $90,750. You were paying 24%. Now what are you paying? $95,450, 24%. Okay, it's the same there. No, it isn't the same there. 22%. So you get my drift. Okay, so I want to go over the new tax charts, because didn't politicians tell us there aren't any tax increases coming? Okay, so let's look at this. We go through here. Let's look at the lowest tax bracket. At 22 grand, you pay 10%. Let's go down to the new tax brackets. At 22,000, I'm paying 12%. Went up 2%. I thought my taxes weren't going to go up. Let's look at the next bracket. So you're 12%. Let's go to 22%. So if you're making 90 grand, you're paying 22%. How much was it down here? 90 grand, you're paying 22%. Same thing there. If you're making 96 grand, how much are you paying? 96 grand right here, 22%. You go down through here, 96 grand, I am paying 24%. My taxes went up. So the politicians were lying to me. Daggone it. Well, election time's right around the corner. So don't forget to vote. All right, so now what we want to do is get over to a new feature that we're offering you guys. If you're in the process of getting a mortgage right now, and mortgage demand is really low, so you need to be competitive when you're doing this, what I ask you to do is, everybody tells you to get 3 estimates. I'm not a huge proponent of 3 estimates because I think it gets really confusing. But if you do that, here's what I ask you to do. I got a challenge for you. Go out there and get those 1 or 2 estimates. But what I want to ask you is 2 things. 1, make sure that is the best effort that lender can do. Okay, don't have them come back and say, okay, I can do that, and then I come back with a better rate, because we're going to teach you how to do that here. And then you go back to them and they're like, oh, I can sharpen my pencil and I can get you that rate too. And then you come back and forth. Why aren't they giving you their best effort first? Okay, that's what I'm asking. So go out there and get 1 or 2 mortgage quotes. All right, what I need you to do at that point is then go over here to our therateupdate.com. You're going to go right up through here. It's a free estimate tool. Okay, you're going to click this tool. It's going to open this up. What I want you to do is fill in your information. Trust me, guys, we don't sell this data. All we use it is for internal purposes. And the only way we're going to contact you, if you want us to contact you, is by you telling me right through here how you want contacted. We'll phone you, email, or text you. Okay, so what you're going to do is you're going to get those loan estimates. You're going to go here and fill out all this information. Then you're going to drag and drop those loan estimates right in here. We're going to scan your loan, your parameters we're going to scan over 85, it's about 89 lenders right now in our database. So what we do is we put your information into our database. It scans the whole country, 85 of the top banks and lenders in the entire country. And it's going to come back and say, here's what we can get you. Okay, so we're going to come back to you. In most cases, here's what happens is we get you a lower rate and I can say it again, and lower fees. All I ask you to do is make sure you get the other mortgage company's best efforts, because what we don't want to do is go back and forth and back and forth and back and forth, because it's a shell game. Make sure they give you the best effort up front. Make sure you let them know that you're not going to go back to them to counter again, because you're requesting their best effort or their best foot forward at the beginning. So this is my channel and this is what I do. So what most people come here for is what the heck are rates doing today? So we're going to go over here and I'm going to show you what the mortgage rates are doing. Because mortgage rates aren't really published yet by almost all the banks and lenders out there right now, we look at the bond market, because the bond market, especially the MBS market, is telling me what's going on with mortgage rates this morning and where the trajectory is for the rest of the day. So what you're seeing on your screen right here is the MBS market. It's the mortgage bond that trades on Wall Street. The yield on this thing is the biggest component of your mortgage rate. Okay, so how this works is what you're seeing on the screen is the price of a mortgage-backed security bond. How it works is simply this. If the bond price, what you're seeing on the screen is the price, if it goes down, it pushes up the yield. It pushes up the rates. It pushes up your mortgage rate. Okay, so we hate when there's red. But if you look at the chart below, it's almost a whole year of red. So at some point it'll stop. Trust me, it's gotta. Okay, so that's what's going on right now. So based on this, we're probably going to see about 1/8% increase in rates. So let's see where rates ended yesterday. Here's where we ended yesterday. These are mortgage rates published by Mortgage News Daily. They do this on a national level on a daily basis as well. What they do is they survey mortgage lenders all over the country. This isn't any bank's lenders' rates. These are actually the averages out there. So you have the top 6 products people use when they're buying or refinancing a house. Here's where they are. So if we look at the 30-year fixed right now, it's at 7.15. I'm expecting that to be about 7.25 later this afternoon when rates all get published because of this, the bond markets. So that is my report for today. So again, guys, if you want to find out more about me and my team, all I need you to do is go to therateupdate.com. Here's all our information. Again, we have the loan estimate tool up there. We have book a meeting. You can apply today. You can give us a phone call, and you can even chat with us. And a chat bot, once you're on the website, after about 5 seconds, a chat bot's going to pop up. So if you have any questions that are on your mind right then and there, we can answer those live. So thanks so much for watching. God bless, guys, and I'll see you tomorrow. Take care. Bye-bye.